Hi everybody, welcome to Christensen Wealth Management. I'm Michael Christensen. Thank you for taking time out of your day to watch this video. This is a stock market industry sector update for the week ending Friday, December 8th, 2017. The following charts are as of the middle of the trading day on Thursday, December 7th. Let's take a look at what the charts are showing. In this first chart, we have the S&P 500 Information Technology Stock Index. You can see that for the last 6 months, we've been trending steadily upward. And then over the past couple weeks, we had a sharp sell-off from November 28th down to the bottom at December 4th. And for the last few days, we've had a bounce or a possible recovery. But what I can see here is that the 5-day moving average in red has crossed below the 20-day moving average here, indicating some short-term caution in the next in the hours to days ahead. Unless the 5-day average crosses below the 50-day moving average in purple, it will be caution, but anything below purple would be a sign of extreme caution or avoidance. Moving on. In this chart, we have the last 6 months of the S&P 500 Consumer Staples Stock Index. For about 6 months, the consumer staples trended strongly lower, and it hit a bottom recently on November 6th. Shortly after that, we took off like a rocket and went vertical here, or not quite vertical, but went strongly to the upside, and our most recent top was this week on December 6th. As of right now, the price of the consumer staples is sitting right on the 5-day moving average in red, which is strongly above the 20, and the 20 is strongly above the 50, indicating short-term strength, which is when the 5 is over the 20, and intermediate term strength, meaning days to weeks, when the 20 is over the 50. So right now, consumer staples is strongly holding on this rally from the past 4 to 5 weeks. Here is a chart of the last 6 months for the S&P 500 Industrial Stock Index. Kind of bounced along for the last few months here. Had a recent low on about November 15th. Took off vertical like many other indexes and stock indices, but for the last few weeks we've had a lot of chop in here. November 30th, and then another high on December 4th, and as of right now on December 7th we are up here at this point. We'll see where we go in the next few weeks, but we have the 5-day moving average in red starting to potentially top out here. We'll see where we go, but as of right now, the 5-day average is above the 20, but the 20-day moving average is below the 50. So we have short-term strength, but intermediate-term uncertainty or caution. So some mixed signals there, but as of right now, we have strength for the past few weeks. Here is the 6-month chart for the S&P 500 Utilities Stock Index. You can see that it was a pretty nice uptrend for the last 6 months, but starting on about November 30th, the utilities started dropping and have not found a bottom yet. So as of right now, the price is currently right here, and we have the 5-day moving average in red crossing below the 20-day moving average in blue, representing caution. Should be warranted over the next few hours to days, and we'll see if the utility stocks end up dropping below below the 50-day moving average, indicating danger. We'll see what we get over the next week or two. This is the 6-month chart of the S&P 500 Consumer Discretionary Index. Discretionary means they sell products and services that you don't typically need but want. That is kind of opposite to what you would call consumer staples, which are typically things you need. So consumer discretionary had a bottom back here, a 2017 bottom looks like about August 18th, and it's been steadily rising. However, we have a somewhat problematic condition in that the trend of consumer discretionary looks to be parabolic, and a parabolic rise in any investment sometimes ends up ending with a rapid sell-off. So we'll see. But as of right now, there was a short-term high here on December 4th, followed by a few days of selling and a little bounce on by the middle of Thursday, December 7th. So we'll see where we go. But the 5-day average is just a long way from the 20, and the 20 is nicely above the 50s. So we have short-term strength, meaning hours to days, and intermediate term strength here, meaning days to weeks. So we'll see what the rest of December brings to consumer discretionary. Here is the chart for the S&P 500 financial index for the past 6 months. A little bit of bouncing here. A bottom recently back on September 7th, followed by a rally, and then a pause, followed by a Thanksgiving rally, mostly due to some speculation in the Trump tax policy. We'll see how this all plays out for the rest of December, but as of right now, we had a recent peak on December 4th and a couple days of selling, but the 5-day average is cleanly above the 20 by a long ways here, indicating short-term strength, and the 20-day moving average is slightly above the 50, indicating some intermediate term strength as well. So again, we just need to see where we go for the rest of December, but right now holding strong on financials. This is the 6-month chart of the S&P 500 Energy Stock Index. So we had a pretty big bottom here back in August, about the 18th and 17th of August, and then a strong rally with the price of oil, a pause and a slight cooling off here, another rally that ended up not working out, and it bounced back down, and another rally. So there's a lot of chop and mixed signals here going all the way back to about September 28th on the energy stocks in the S&P. We'll see what December brings, but as of right now, it had a recent peak on December 1st, and it's been selling off pretty well for about a week or so. The 5-day average is above the 20, but the 20-day average crossed below the 50-day average here on December 6th. So right now we've got short-term strength from this rally there, but really we have a lot of intermediate term weakness or indecision going all the way back to September. So we just need to see where this plays out. But right now, nothing, no strength either way. Here is the 6-month chart for the S&P 500 Healthcare Stock Index. This is our final chart for the day. Lots of choppiness here, but it has been in an uptrend since about August 18th. We had a strong Thanksgiving week rally, and as of November 30th, we had a recent top here, followed by a week of selling. So we'll see where we go in the month of December, but right now the 5-day average is above the 20, but it has appeared to have peaked and is trending lower, so that's weakness in the short term. And we have the 20-day moving average in blue that's actually below the 50, indicating intermediate term weakness. So not a lot going on here in healthcare. In fact, the current price of this index is the same as it was on September 7th. So no progress at all since September 7th. That's 3 months of going sideways. So we'll see where we go in the future on this one. And that's the last chart we have for today. Thanks again for taking time out of your day to watch this video. This was, in fact, my first stock market industry sector update. I hope you found it helpful. I will be posting these weekly. And if you could take a moment to subscribe to this YouTube channel, then you will receive a notification whenever additional videos are posted. Also, If you use Facebook, LinkedIn, or Twitter, please take a moment to look up Christensen Wealth Management there and like or follow the feed, because I can post there more frequently. These videos are a weekly occurrence, but I can post more often on the other social media sites. Hope you take a moment to do that. I look forward to staying in contact with you more often, and have a great day. I look forward to talking to you soon.